All right, Brian. Today we are going to go over, as part of our Impact 12 series, let's go over our favorite one, which is cost cutting.
Oh, I had a different one in mind.
Which one? Do you mind me asking so we can know when it's that time?
PG.
Okay. So it's yeah.
Super excited, man. Let's do it.
All right. So why? Well, first off, I guess this will be hard because it's not your favorite now. But if it was, pretend it is. Why is cost cutting your favorite?
Right. So, a very good question. There's two things that flow through directly and 100% to the bottom line, your net profit. Cut costs, cost cutting, and raising prices. And those are almost always at the forefront of any project or even coaching, that we work with. We're going to evaluate your pricing structure and cut costs.
Yep.
So the true value then of cut costs, both for us, but because it creates an ROI immediately for the customer, client, and business owner, is that they can see a direct result of both working for us and the effectiveness of how we train and teach, because it has direct and immediate impact. I can think endlessly, but if we go in and we find something on a bank statement where somebody's been paying, $800 to somebody and they're not getting a good result, and we can free that up, like that's night and day.
Yeah.
Now, an extension of that, I'm just going to do quick math for anyone in the audience, is people don't understand or struggle to see how much revenue has to be generated to create like an $800 bump to net profit. So we'll just, keep the math real simple here. If you were at a 10% net profit, okay, oversimplifying a tiny bit here, but you would need about $8,000 in revenue, okay, to generate that $800 at 10%.
Yeah. So from a workload to find ROI for our clients, right?
Yeah.
We could cut $800 in savings, or we could generate $8,000 more dollars in monthly revenue.
Right.
Which is more work.
Yeah.
Yeah, getting more clients, right?
So if we dive a little deeper down that, we also see with consistency that most people have no system, no process in place to evaluate their pricing. Okay. I'm sorry. In this case, I'm talking about cut costs. So the price they're paying for things.
Mm-hmm.
Okay. They're just like, haven't looked at this, and insurance is a great one. You signed up 3 years ago when you launched your business, and you have no idea if you're in a good spot. And you should know if you're in a good spot. And if the answer is yes, good job. So like we'll come in and, on the overhead side, we're going to audit everything. Okay. And then what we're going to do is we're going to work together and create a system, keep it as simple as possible, but that says, okay, when's the next time you're going to check this? Bare minimum would be like once a year. But I prefer, assuming the resources are there, once a year.
So we're gonna get to how to make an SOP for it. We're gonna do that at the end. But you're absolutely right, because large corporations, when do they do it? Every single time they purchase something.
Yeah.
Every single time they have a series of approvals. They have a person dedicated to getting it the best price for whatever it is. Every single time, right? So they do it every single time. That's the A plus, right?
Yeah.
But what's a C minus or a B plus or a B? Once a year?
Yeah, and the lens, I think a really healthy lens to look at it is, where are you at now? And I can probably guess that most of the people that we come across are close to zero. Like, I haven't looked at it.
Yeah, so that's a good thing to bring up too, is let's talk about why they don't do it, right? So common reasons why one, we like going in there, it's such a big impact, right? And they're like, holy, it's because they haven't done it in forever, right? And so we know they're not doing it. They'll tell you, you could tell us you're not doing it, right? As often as you should, which is once a year, maybe, preferably once a quarter, but sure, once a year. but they're not doing it ever, right? And so why? They don't have time. Well, who doesn't have time to do an hour worth of work that's going to save you $800 a month, which is the same work as getting $8,000 in additional revenue?
Yeah.
Yeah, I got an hour for that, don't you?
Well,
yeah.
And let me add this. Take a moment. I use 10% because it was easy math. How many business owners out there are not at 10%? Sometimes it's industry.
Oh man,
food, restaurants is a great
3 to 5%. How much?
Yeah.
How much higher is the revenue then? 10%'s the.
So at 5%, doubling that, 16 grand. That's half a month in sales.
Yeah.
Okay, for a 500K business, restaurant. So often, take it one step further. The people we're working with are struggling. You called me because you're struggling. If you have a lot of the answers and you have the systems, you're doing a ton of things right, you have less need for us.
But they're the ones who call first.
Yeah, because
they want to get better. They're eking out
value of sharpening
gradual, right?
So we get a lot of people that'll come to us and they're like, I'm at 1%. All right, so that's $80,000 in revenue.
Yeah, we're sometimes in the negative, right?
Yep. So, and I want to hit this because you mentioned something and it's so true, and I think it's really important for the audience to understand this. It's about efficiency, really. Okay. So how much work would it take to generate $800 of profit? That last example was 80,000. And that is a tremendous amount of work.
And here's a quick way to understand that math, right? So how to look at profit every single time is your net profit, whatever that percent is, for every dollar I make, that many cents goes into my pocket, right? And so, which is why this is when you look at it, when you cut costs, why just put $800 in my pocket? Well, instead of $800 in sales is only at a 10%, $80. Is $80, but wow, $800. Holy cow, that's a lot of revenue when you look at it as for every dollar I bring in, I make a couple pennies. And that's why it's a critical work, right?
Yep. Let me respond one more thing. I'll keep the frame that you set up. 1 hour to do this. Okay. So we just established that it's a ton of work to make 80,000, to make 16,000, to make 8,000.
It's a lot of times that's the impossible work that we get brought in to do. So, but we do this first.
So put that through that lens. I can't give you an hour to do. Nope, you're lying. It's just a lie, and that lie is part of what's holding you back. Part of how you're getting in your own way, sabotaging yourself. And I know you love this because we squabble and have fun with this all the time. And the real answer is, what else are you going to do with that hour? Because there's plenty of business owners out there that are just using their time unwisely.
They're working 16 hours a day.
Yeah.
7 days a week.
Or 2 hours a day. And both of those are wrong.
Yeah.
You're not going to be successful at 2 hours a day. And at 16, you're going to burn out. And that's not where you want to be. So it's time to start working on the business, not in the business.
Exactly. And that's the answer. There's cost cutting is almost like these are all our silver bullets of our toolbox, right?
Yeah, that's another good one. So this series is about walking through the Impact 12. Okay, and these are the 12 things that we think align most with the Pareto principle. Mm-hmm. So how can we get the most accomplished with the least amount of energy and effort? So we want to do 20% of the effort and get 80% of the results
in the fastest amount of time possible.
Yep. That's why we picked these topics and cut costs at the top of the list.
Yeah, I mean that's how we run a traditional 12-week project, and we are able to show ROI within 12 weeks, even though they haven't ran the ads yet or whatever it is, right? It's because we did the cost cutting and other work ahead of time that generated the ROI. And this is something important that I want to say of why we do this work first. 99% of our clients, door swings, increase revenue, right? Product out. That's what they want from us, right? And every time we say, okay, cool, yeah, absolutely, let's do that. We're going to do this work first, though. And then we show them why. So and that's the important part for us too. It's like we just talked about, for every dollar you make in revenue, you're putting 5 cents in your pocket at a 5% markup. And so, sure, you hire just an ad agency who brings you in an additional 100K in revenue. Well, you're at 5% still, 50,000, or what is the math? 25,000.
Yeah.
Anyway, sorry, I shouldn't have chose 5%. But then if we get you up to 10%, we just doubled your net profit on the same amount of lead gen that you're going to get. And so we just doubled the results of that net profit. And that's super important. And that's where like that PEMDAS of business consulting is, that order matters. And so that's why we always do it first. And we get pushback. They're like, oh man, I just want to add. And it's like, we explain it and they're like, oh, I get it now. So one thing I want to talk about to get into some nitty gritty. Well, first thing, let's back up. And I want to say another reason why clients don't do the work. And this is what we hear all the time. I'd have you guess, but just in case. So, my brother-in-law is the insurance agent for Allstate, and he's the best. I know I'm on the best thing possible. And what do we know the truth about your brother-in-law as your insurance agent?
Well, I'll tie this back to you're probably oversimplifying that. He's probably not the best. How do we define the best? Insurance is a hard one, right? If you've never made that call to the insurance company, you don't know what their service looks like. You don't know what their customer service or guarantee looks like. And if you haven't used it.
And the end goal is not to get the lowest, cheapest price possible specifically for insurance, right? Because you still need adequate coverage that will protect you and help you weather the storm.
Yeah,
right?
I would frame it like this. What you want is to trust that you're making a great decision. There's plenty of times where you might pick the one that's $5 more a month or $10 more a month. The question is it, do you trust? And I would say challenge that by establishing trust through real data.
Yeah.
In this sense, that means no, you had to get some price quotes, some competitive quotes. Okay. A common practice that I use with all of my insurances is I make my insurance reps send me comps. I'm like, hey man, I need you to send me comps every April or else our relationship's done. Now, he's a friend of mine, so when we start up, it's like, yeah, sure, I can do that for you, Brian. But I'm also not bluffing. Like, no, this is the bare minimum that I'm setting to have a relationship with you. Because if you can't do that, he doesn't.
And so I get it. It's your brother-in-law. You're never going to stop using him, right? But you still do the work. You follow the SOP. You get 3 quotes, and then you make him do the work, because we know family is going to deprioritize you over new acquisition clients, right? Why? Because they'll catch up with you. We'll figure it out. I'll make it right. But as a business owner, you can't depend on them to do that. You need to be in control of your destiny. You need to make sure that you're doing what you need to do to get your best deal. So you get your 3 quotes and you bring it to them and you say, hey, is this still the best coverage for me where my business at based on its growth and what we're doing? Yeah, those are okay, great. Here's my other 3 quotes. I need you to be competitive.
Yeah.
And at least tell me a story. I'm not going to switch, but tell me a story of why I should stay with you. Make it a good business choice.
And something else I think I would add is I want to put perspective and frame back on the table for a moment. If you're in a scenario and you do a cost analysis and you're like, I'm heading for the iceberg, we're going to be out of business in 3 months. Okay? Then you've got to be honest and understand that having no insurance because you're out of business and no coverage, no job, and laying all those people off into the ether versus really cutting costs and saying, there's a great saying, I steal it mostly from you, but it's not new. It's, if it makes dollars, it makes sense, right?
Yeah, I don't know who said it. I gotta figure that out so I can give credit.
From you because you say it a lot, but there's a beautiful truth to it, which is okay. So saving money, like you don't spend money on luxury things if you can't afford luxury things. So if you need to cut back your business insurance to the bare bones, I keep making the general for car.
Well, and you definitely don't buy luxury goods if you can't afford basic goods.
Correct. So I just wanted to add that, sprinkle that frame in there too, because you see a lot of people are like, I want a company phone, I want this, I want good internet speed, I want da 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 da, and they're going through all this list, and I'm like, well, okay, how does this affect your sales flow? They don't have an answer like internet speed.
Mhm.
People are out in the field. Okay.
Yeah, and that's another good part is with an SOP, you have a process to do the front end work of not having to cut costs,
Yeah.
meaning you put it through a financial lens of is this really a smart business sense right now,
Yeah.
right? And what do I always talk about? What's the trigger for when we're going to make the next step for a purchase or whatever, right? And you say, well, this is the capacity need and this is the financial requirement to pay for it.
Oh, by the way, and your accountant knows exactly what you're talking about. They're like, I wish you would look at the cash flow statement,
Yeah.
Darn idiots.
This is why you can't pay your bill.
I do this every month and no one looks at it.
Yeah.
So if you're big enough that where you have bookkeeping or an accountant, like that's how you successfully make the financial decision. You put it through that lens.
Perfect. So next, I want to go. So there are two different costs. There's two different buckets that we look at. One is your operating costs, or what are called fixed costs, right? Fixed costs are, and this is the educational piece, so you can understand because at different points in your business's life, different ones will matter more. So if you are a high volume company, specifically commodity, right, like McDonald's or whatever, they're going to look at their cost of goods sold, and any percentage of cost of goods sold is extremely significant to them. Whereas our smaller businesses, operating costs are very important to them. Operating costs specifically are always a dollar for dollar flow through, whereas cost of goods are a ratio of your overhead to what your sales are. So, if you're doing 500K in sales and you have 60K in overhead, your overhead's very significant. But if you all of a sudden jump up to $10 million in sales and your overhead's still 60,000, then your cost of goods sold is going to have a much higher rate of return because that ratio is actually higher than a 1-for-1 return. So something to think about. But the important part here, let's not get into the weeds, is let's look at both cost of goods and your operating costs. It's not just about lowering your insurance, but let's also look at ways to make purchases for your materials, et cetera, smarter. With
So the real answer is you look at all of it and you do it through a process. It's not guessing. It's you start and
I just didn't want some finance kid to tell us that there's a difference between the two, and just because we didn't talk about it, so that's why.
Yeah, but the real answer is you and I'm very impressed with how complete the system that we have developed is, with walking through each stage of it, doing a ton of things, whether it's scrap or vendor pricing, discounting. Most of that's on the variable expense side. On the fixed side, step by step, line item for line item, going through bank statement, going through your credit card statement, going outside that. Really, well, some of that depends on how you're set up, but it's very systematized, and that's what you need. Is that, hey, do this, do this, do this, do this, do this, and some of those are going to hit the bullseye.
Yeah. Yeah, I mean, what I always say is, and this is a real number, that when we do a walkthrough with a client on like our first day, I usually have to step over 5 to 8% in cost savings, right? And they're like, "What does that mean?" And it's like, no, like it's so obvious. Like, oh yeah, that's you have two printers, one doesn't work. You bought a whole nother printer instead of fixing one. Like, that's a regular practice. Oh, you're still paying for the service package on the broken printer. Yeah.
That's a great one.
Oh, and it's leased, but you went out and bought another printer from Staples? Yeah. Why? Because I didn't have time to make a service call. What? Well, then let's stop paying for it. Oh, yeah, I should. So that's literally like stepping over these. You see it all the time.
No, and just one last thing. I mean, we always find savings, but in your event, remember, it's really about the trust but verified part, right? So you need to know with confidence, not guess, not BS, that you're in a good spot. And the only way to do that is to effectively do an audit, right?
Yeah, no hard feelings. This is business.
Yeah.
Right.
And if you're not, your practice is way off target.
Yeah. So just to recap all of that, right? It's super important. It's way easier than getting revenue, right? And you just look at cutting all your costs in a systematic approach. You list out all your expenses, which you should have in QuickBooks, and you just check them. You price shop them, right? And like I said, even if it's your brother-in-law, you're never leaving them. You just let him know, hey, if he's way off, you got to meet me halfway at least, or at least tell me the story, right? And then you make a commitment with an SOP. This is now the process. I look at this sheet on my QuickBooks and I call each vendor and we price shop. That's it. And you do it how often?
I recommend once a quarter.
Once a year is fine.
There's a resource component. If you're a small team, like if you've got an accountant, your accountant should be doing that probably monthly.
And we're going to tell you to do it once a quarter because you'll end up doing it once a year.
Yeah. So some of that's resource dependent.
Yeah.
Best practice would be once a month.
Yep. Absolutely. All right. That's it for this one.
Well, thanks, Adam, for talking cut costs with me. It was a lot of fun.
Likewise, man. Yeah. Be great, man.
You be great.
Oh, you be great.
You be great.